Hello, hello. Hope everyone's doing well. Let me know if people are joining. Let's see. Welcome. Let's see if it shows me live on here. It does. Okay. Let me just post this onto here as well. And we'll get going. Good morning, Dave. Good morning, everyone. Hello. Same time every week. Like I said, we're ready to go. Okay. Bitcoin. I'll start off with Bitcoin, go through a few different things, questions, etc. Everything will be covered. Yeah, it's not a bad place to reject, to be honest. Where's the viewers today? What's going on? I think it's because I had a bit of a fumble. I didn't even realize I hit 5,000 on YouTube. Thank you everyone for that. Apologies everyone, I think I know what's going on. I need to do something. But get your questions in the chat and I'll come to them as soon as I'm ready to go for it. It says I'm live in two different things. I'm live. What? Do you trade traditional markets? No, I don't. Okay, that's updated now. I have no idea what that one's doing. Okay. Cool. I have one live stream now and we're good to go. I'll cover your questions. I'm on live on 2. Yeah, I fixed it. I think I fixed it now at least. Yeah, we're good to go. Okay, let's get into it. Bitcoin's seen a move down over the last, since this weekly open. We've bounced off a really nice support level. However, it was bounced off of during London session. Okay. So we've seen this bounce during London session. And we've come into a resistance area being, I'll just bring you lot into Exo here. This resistance level being this NPOC. Okay. And it's a poor low. I'm really not interested in trading today because there's conflicting bias points. Okay. Conflicting bias points. So we obviously have this being a poor high on the day in Asia, but also you've got the poor low. So like we could be in for a decent amount of volatility. We could see the ideal scenario and the ideal play would be maybe a move up to this level here of 67,370 before move down, or even move down from here. before we take the low again and maybe move down all the way down towards 65, 940. This is a nice level. Without taking the overall wick low, you take this level and then you see a move towards the upside. So these are the levels really of interest, anything local to be looking out for today. I'll go through, yesterday we obviously had a a fairly similar situation where Asia session puts a high in, London puts in a low, you rally within New York, and then you see the London low taken out. Okay, and then obviously you actually then see this move back up to an MPOC where it then reacts and sees a massive dump. Tons of different things to be looking out for. Okay. Really within this market, and tons of different ways to be trading. Just because the market is going sideways, has it been from Friday, doesn't mean there's no trades to be taken. There's tons of different plays to be had based upon statistics, bias, etc. that I'm always going on about to you. Okay, just bringing it back to trading view here. Yeah, where is this? I'm pretty sure I did mark this level out. I didn't. I'll mark it out quickly. It is 65,942 all marked out. Okay, and we'll bring this into here. So now we've got these levels. So you've bounced off this one level, but then overall we have this level down here. That's interesting. This level's really interesting. I'd always pay attention to that one. That also runs a high chance of running a really potent liquidity level of $66,000 total. Because if you come down to this, right, you're also running 66k round number, right? So you have this kind of zone down here where if you come into it, you would take them both and then you could see a move up without taking the overall low, and also trapping a lot of people who are expecting the overall low to go at that point. Now that doesn't mean we're going to hit today. If anything, you would actually be looking for these highs to be taken today if it does continue rallying. Okay, because this is a poor high, really poor high for the day. Like overall, I would expect these to get taken at some point. It's just a matter of time when. Something like this would be great to see. Even tomorrow, we get this level. It would be fantastic. Let's go. Oh, you're for yes, of course. I'll add subtitles. So I'm sorry if I speak a bit posh. What was I gonna say? Yeah, and something to also bring into mind here is that just because if you have a level of interest on the day, doesn't necessarily mean that level has to react. Doesn't mean that level has to react. Like this round number down here. Like it doesn't have to react down there. You have to always be paying attention to it. And also, let's say you have a level of interest, prepare for it to do the exact opposite of what you want it to do. And that's like the best way to be. Because you might want it to do. I might want it to do something like this, but I also have to be prepared for if it just does this. Right? How am I going to be prepared for that? I'm not going to set limits there. I'm going to have diligent risk management in place. And be prepared on that sense. I have to be prepared for the market to do the exact opposite of what I'm planning on it to do. Otherwise, I'm a risk manager at the end of the day. Yeah. Let me go through some of them. So today, London make low, and we can say Monday high would be a weekly high, but today's Asia high looks bad. Where would I short? Yeah, it's a good point. Yeah, because there's tons of different things to take into account. Like we've just put in Monday range as well, which I should update. I need to update this. I need to add this to my routine. Monday range. You can see the Monday range last week as well. You broke it to the high once. Then you get, I don't know if you got this move down first, but you got the move down first, and then it just continued moving high and then break the low today. So this high is fairly protected, at least in my opinion. And this is, my opinion, is through specific data points. Yeah. So obviously you've got the high low. We've taken the low. So this is the low's breach. It doesn't have to be a close. You've breached the low, and this high should be protected. So if you're going to look for a short, if price is to move up, I do like these levels here. If I'm honest, these levels here, like I wouldn't really want to see this breach anything more than 67,850, and they shouldn't really be doing that. Anything in this region here, and I'm actually very precise on my levels, but anything in this zone here, you know, you're looking to, I would be looking to potentially fade that. What does VBL stand for? Volume-based liquidity. This is something that, again, like you always have to be thinking outside the box. No one tells me what to do or write on my charts, etc. But for example, if we just go to Exocharts, these are the point of controls that I'm trading from. Volume-based liquidity level. So like up here, for example, you can see we have this MPOC here. That's a volume-based liquidity. Down here, volume-based liquidity. So it's just about finding the best ideal levels down here as well, to be actually taking trades from. Okay. I appreciate it, the vendor. Yeah. It's cool. I'm not really doing any of this necessarily. You know, I'm literally just trading and sharing my thoughts along the way. As I, you know, honest truth is that my goal is to be number one in the world, and that's what I'm trying to work my way towards myself. On that front. And and you also high rate levels have some of them do, yeah. And this is the thing, when I say high rate levels, they're not static, you know, like high hit rate levels, okay. High hit rate levels, for example, on Bitcoin, let's say today there's a high rate level up here. They're not static. Like the percentage chance fluctuates. Number one, on the day that I'm actually checking the high rate level. I've called it high hit rate levels just because I don't want to go over like what it is. You know, because I don't know who else is tracking this stuff. Fuck, it's getting hot in here. Sorry. Turn on my air conditioning. You know, number one, I don't want to explain what it is to it because I haven't heard anyone else talk about it. And number two, it's day dependent. There's so many different variations to it where even if I say there's a 92% chance it hits at that very moment, that percentage chance could decrease, increase as the day goes on, as the week goes on. It could decrease, increase. You know, and that's important. You know, is that type of stuff, and it literally just comes through the idea of brainstorming. You know, consistent brainstorming of different ideas. Let's mark this out here. VBL, yeah, so VBL stands for volume-based liquidity. Yeah, one day I'm actually, I plan on doing, I really wanted to do this thing that I've been planning for over a year. I want to record a whole year in my time of trading, which is, you know, be a lot of data in reference to recording everything and then uploading that as like in a documentary style, to really show that. I mean, I don't know if you've seen my previous stuff and everything. I went and did a lot of live trading in that aspect of recording trades, everything like that for the public. People just don't find, I mean, the execution points can be really interesting, but I think people find the graphics more interesting. I mean, I could definitely bring back live executions if people want to see that on a frequent basis, and also go through, and what's actually really valuable is running through my own journal. Like I want to record my own periodic reviews because I perform quarterly reviews, okay? Quarterly, monthly reviews. Weekly reviews aren't as diligent as the other two, but quarterly reviews, you know, and going through stuff like that is really important. So yeah, I can do that, and you know, it's worth my time, and if people are going to find it extremely valuable, then I'll do that. I just don't know if people online are ready for that. I mean, people kind of like being spoon-fed, and my specific strategy and setup isn't going to be referencing towards how you're going to succeed with it. That's why I went through and said I'm going to actually go through and share a lot of exactly what I'm doing, because I'm still kind of the very bare bones of it is I'm very basic level in what I'm discussing with you all. There's still so much stuff that I need to dive into in reference to exact execution. And the reason I don't mind sharing that now is because I realize that even if it's out there, people aren't going to be able to follow it to the same way I do. And that's where kind of the edge lies as well. Yeah. Thank you, Showbiz. Appreciate it. Can we show weak highs or lows without using TPO and simplify and simply on TradingView? You can do it. I mean, TradingView's got their own TPO functionality. Okay, so you can see here on the bottom left, we've got this TPO functionality here, and you can actually highlight as well. If we go to style, poor high, poor low, and you can mark out anything 2 blocks or more. So it's marking out the poor high, poor low. I need to do it on all of them though as well. Poor high, poor low, poor high, poor low. And it will help you mark them out as well, especially for intraday bias. Sorry, I had to check my doorbell was going off. But yeah, you know, there's poor highs, poor lows on TradingView, etc. Give it a check if you want. Worth a looking, and it's simple. You don't have to be using Exocharts, although I do vouch for them hardly. Without the TPO, I mean, you can, but I mean, essentially, it's just two lows or highs that are put close together on the 30-minute, where there's no time, no time spent. It's a lot harder to track via the just basic candlesticks. It's just more efficient to do with TPO, and I just recommend doing that. How to find high rate level? I always get asked this question. I might just make a video on it or something. I've probably got tons of stuff out there on it. I went. How can you gather stats around TPO since date? Yeah, this is a great question, ASC. How are they volatility dependent? So we'll go to Exocharts. I want to show something. This is quite high level, or yeah, high level this. So what you can do if you're generating stats based upon TPO, and this is only really available through Exo at the moment that I know of, but you can create. I don't want to mess up my chart, but basically the question is, so if anyone wanting to watch this later on that is watching this, someone's asked, how do you create stats on TPO? Because they are volatility dependent, meaning you change the TPO's tick size based upon, for example, how volatile the chart is, right? And what you can do is on Exo, you can have this percentage mode. So what I got, we got this added, okay? I'll let it load up. Right, and you can change this. So this is, rather than basing it off tick sizes, we can base it off of percentage clusters. So we can do this wrong one, 0.2%, for example. So each block is going to be 0.2%. If we want to update. Here we go. So we can just increase it, as you can see, okay, and it will be consistent throughout the actual entire chart. Okay, so when you're doing testing, etc., like going through the data points, etc., especially with TPO, market profile, anything like that, this is like really good for testing, especially back to, I don't for TPO, I haven't automated any sort of testing or anything like that. So yeah, you have to do it manually, and it's just going to take time, and it's just about putting in the hours in reference to Google Sheets, spending hours figuring out what you want to take. It can be as simple as, how often is a poor high revisited, using the 0.1%, 0.15% TPO setting. Okay, and then because you've got consistency then throughout the entire TPO. Okay, so I'm hoping that helps somebody out. Yeah. Okay, so hopefully that makes sense. And you can adjust that in Exo. Again, there's some other platforms that I don't know if they do the percentage thing in that same manner. What's the WK and numbers that on TradingView besides the replay button? Oh, all of these. These are my different templates for indicators. Yeah. Are accurate? Are good? Are they as accurate as Exocharts, for example, like the TPO and volume profile? Personally, not 100%. There will be some slight discrepancies sometimes, but oh, the footprint. I definitely wouldn't use the TradingView footprint. I would use the Exo footprint. I wouldn't use the TradingView footprint. TradingView TPO is actually solid. It's not bad at all. But the footprint, I mean, there's a lot of work need to be done there, in my opinion. So yeah, there's that. I would also like to mention that on a Tuesday in particular, the chance of London putting in a pivot. Okay, so you can see here that London's put in the pivot for the day today is actually increased slightly than other days, especially more recently. London, and this is the thing, is also to keep your stats up to date. You know, if you're going along, just continuously. You know, I spend an hour every day, and if I miss a day, then I'll go through it on the weekend. Just collecting and updating my statistics, because there's certain very specific things that I want to be tracking as well. Okay, in reference to that, and you know, some things like London pivots and the first pivot today or the second pivot today and stuff like that. I've had so many people message me and say, you know, I think I've come. This is actually hard to say. I've had a lot of people always say to me, I think I've figured out where high rate level is, and there isn't a single person that has done that. And that's not for me to be like to blow or anything, but there is a lot of different things to actually go around and test these levels diligently before just putting it out there. So it's really just thinking outside the box. That's not to say what your level is not working at all in reference to this is your high rate level. But it's not something I've spoke about online at all before, okay? So yeah, keep that in mind. Do you still use the Bybit data for your Exo? I use aggregated data on Exo for executing, but I execute via range charts. Okay. So yeah. Well, New York close. I went through this. New York close. I went through this last week, I believe. I went through one of the higher rate levels. I won't do it again this week, or maybe I should just cover it briefly as to how like you can create gaps and custom gaps. I don't use this edge that much; it's kind of deteriorated a little bit. But you can create custom gaps in the chart through Exocharts, and then from there you can obviously, you know, everyone likes to trade gap fills. Okay, gap fills are, you know, just gaps in between time, etc. How can you create that on for example, Bitcoin, which is a 24/7 market? Obviously, you've got the CME gaps. Everyone's familiar with that, but why not create a gap that is not everyone's not so familiar with? And that's where you can do like filtering. That's where you can do like filtering between charts, etc. You know, different TPO sessions can be filtered out. Etc. Yeah. Hi, dude. Today's play is I'm looking for. Yeah, I think the thing is with when you're looking at each intraday play, etc., is that, you know, you should really be looking at it on at least in my perspective, a day by day basis. I went through one of my students' journals today, just really diligently picking apart certain things with him that we've been live trading together. Um, picking apart what's been working for him, what hasn't been working for him, and how to really increase his profitability. Um, because he's got decent amount of size, and to pick that up, you need to be really working through different things, and you can't be sloppy at all. It's very small factors that, especially when you're at a smaller account size, for example, you might not recognize when you get to a bigger account size, such as necessarily your fees that you're paying. Fees are extremely important. If you knock your fees down by 20%, how much would that increase your bottom line at the end of the year, right? And that, how would you knock down your fees? Well, you'd look at your market versus limit order ratios. When are you entering a market? Should you need to be entering a market? Okay, well, you don't. Okay, so now we just reduce 50% of your market fees, which is a massive reduction in the amount of expenditure you're having over the course of a year, therefore increasing your bottom line. So there's tons of different ways and aspects to be looking at things like that, that I'm really just trying to ingrain into that. That's his mind, at least one of the things. But it's such an important thing. What do you consider a small account size? Hmm. Um, a small account size. Anything below account size is different to, like, you got two different pots, right? Um, you got a pot, and then you can have what you're trading from the pot. You have only put a small amount of your money on the exchange, etc. Well, let's say I'm saying the bigger pot. So if you just say you got a bigger pot, anything below, I would say 100,000 is small. It's fairly small. It's fairly small. Um, Maybe I'm wrong, but it's all relative, right? It's all relative. I said it's fairly small. Obviously you have below 10,000, right? Below whatever it is. I'm talking about your main pot. What's your opinion on ICT and the quarterly theory? I don't know about that. Honestly, I've never really studied stuff like that. Um, I just know all these different things have different names. None of it really matters. The thing is, I guarantee anyone that trades that type of stuff or knows about that type of thing, they don't generate any sort of statistics or any sort of edge behind it. They don't know about expectancy. They don't know about collecting data. You know, they're just going off of gospel and someone's word as to what works and what doesn't. When in reality, the edge comes in really, producing your data yourself. You know. Yeah, a car invest. Devendra Hate. Yes. I'm on the wrong person. Agavainst. Yes, you don't even need to sign up. Really, just drop me a DM. I don't really mind just giving it out. It doesn't really matter. It's just people to learn how to use Exo and get a grip of Orderflow, etc. Uh, my edge is knowing I will likely lose money today. You can't DM me. You can't DM me on Twitter or Discord, one of the two. Um, yeah, just DM me there, and you'll be able to gain access to it, no problem. Is it just one meeting? I mean, no. So Tony, look, I go through, so this mentoring thing. I don't have any space. I don't have any available spaces. So don't do it. Please don't. Unless there was one person I was speaking to yesterday going about mentoring, and that's where really I dive into everything I do in complete depth. Um, at least and that's especially as time's gone on. It's not really worth my time to do it, but I just do it because, from the rest perspective of it, what I do is I go through and I actually take, teaching some. What you realize a lot is when you're teaching someone, through scratch to trade or going through their journal diligently, it not reminds you of the basics, but it goes through everything. Okay, it goes through, the basics, the fundamentals, different things. It reminds me of problems I had in my career and brings it back. It removes complacency from my own brain. Okay, so that's one area of why I'm doing that. Bitcoin moving down a bit here after hitting that epoch. If it takes this low, you'd obviously look for that 65,940 in my opinion. And then if it loses that, then you're looking for much lower, I think. No, it's 4 meetings, but the price, I need to update it all. The price isn't accurate. Nothing's accurate there. I just need to do it. I just don't have time to do that. I'm really just focusing on my trading, and I do a live stream a week, and that's about it. Yeah. But yeah, in the mentoring, I go through. I've really wanted to, if I'm honest, I just haven't asked the students because I don't know if they'd be okay with me posting a lot of their info to the public, which isn't something I don't want to get in trouble for doing any of that. Because we're like going through trades together, live trading, etc. And that's really, might be a sensitive topic for them. But yeah, it's about just, and the thing is, I've actually taken on a lot of profitable traders, and the aim isn't to necessarily just turn someone from unprofitable to profitable. Is to take someone from even just who's making money to making even more money, right? And that, people are very happy to do that. And it keeps me on top of my game, It keeps me on top. I have tons of work to always be, there's always room for improvement. I'm nowhere near the level I want to be at. Nowhere near. And that just requires a ton of work to get there. So, yeah, like I said, just remove all the complacency. But there's tons of work to do. All I do is preach about statistics and journaling. How much leverage is a good, safe leverage according to me? Well, leverage doesn't really matter. It's just about how is your position sizing correct in reference to how much you want to be risking per trade. That's all I would say on that matter. Yeah. I really appreciate all of you here, by the way. Quite a few of you here. Thank you. So anyone that's DM me now, I'm gonna respond to them on my phone. I need to just get them at the top of my chat because I got a lot of them. I think these guys here. Just wave to me. I think I'm just waving to a few of you. Right. But yeah, it's just all about position sizing, how much you're willing to risk per trade. Someone. I'll tell you that's something that annoys me the most. Is like the people just risk really fucking wildly with no reasoning behind it. This is the number one thing for me, is that someone will go into a trade and risk more than it did in the previous trade for no other reason than, literally than my gut hunch is, I have a feeling we're going to be moving, it's a good trade. With no data, no nothing, nothing else like that, and it's really, really scary to see that. You know, like I say, what I'd recommend, and because a lot of people are probably in this state, um, is to start with fixed risk. Like there's no other way to start. If you're not profitable, you have to start with fixed risk. At least in my opinion. Now, a lot of people out there that I look up to even that go on about variable risk, and I actually completely agree with them. You know, they say that you should be risking based upon your setups, and I completely agree with this. However, most people, especially new traders, have no idea what their better setups are. So the best way to start is with fixed risk, and then from there work on a basis of categorizing your setups into different grade parameters and risking more based upon those. You know, so start in the beginning, risk fixed, risk 1.5% of your account on each trade fixed, you know, and go from there. And you know, journal 3 months worth of trades or 50, you know, journal. So this is what I would do. Journal 3 months worth of 4 months worth of trades, or 50 trades, whichever one comes first. Okay, it doesn't matter. Like frequency, it depends, right? And then from there, then start going on. And you know, diving through your journal. You know, that's really, really important. No problem, Tony. Um, Long time lurker and follow on Twitter. Appreciate it. Yes, Lucas, I will. Give me a second. And I know I'm not your kind of typical. This is something I'm very much aware of, that I'm not the very typical guy that comes on YouTube, and I could go through and run through all these different market requests, right? I could just say, someone could say, what do you think of this coin? What do I think of that coin? I always keep saying none of it matters, okay? None of it matters. At least to me, at least, none of this really matters. I mean, unless I'm long-term investing. Right? The one thing I'll tell you, I'll actually tell you lot something. This is one thing I do like. I do like this stock. And this is just for long-term investing plays. This isn't something I'm day trading or anything like that. Just long-term investing plays. And you can see a few there, but none of it is to do with trading. That's why I don't mention it. None of it it's not the same aspect as what I'm doing day in, day out, in out trading on a more regular occasion. Okay. Do I utilize prop firms? No. But I've been reached out. There's only one I would ever touch. There's so much skepticism around them. There's only one I would ever touch. And you know, it's all down to your own opinions, of course. But there's only one I'd ever touch. I'm not going to say who that is yet. Well, no, it's Breakout Prop. At least for the time being. Okay. Maybe in the future I work them, but the key of what I'm trying to provide you here is, I always go on about statistics. You know, I'll stop. I could stop all the live streams today and just continue working on my stats, etc., which is what I'll end up doing. But something I want to provide to you lot as a, you know, just to kind of see how you would all really appreciate or find it, is a stats tool. You know, something that you can go to frequently and dive into your statistics and curate your own statistics, because I know it was a personal struggle of mine, and it's only at now do I really get it to, you know, a phase where a lot of it's automated, some of it at least, and it's really, really effective in my trading, and no one taught me it before. Bro, how do you trade liquidation and magnet for target SI levels? I don't use any of them, right? So a lot of people are probably thinking that, what am I doing with this? Right, you know, I've got this liquidation levels up by Leviathan. I'm literally just checking a few indicators out. That's all there is to it. This is a really good one, though. Definitely, I would check this out. The thing is, I have to use indicators which have... I don't just dive in and start fucking randomly clicking buy, sell, or where these levels are. I would have to spend weeks, if not months, going over, deciphering where am I going to be actually entering, why am I going to be entering here, why am I not going to be entering here, you know, and really setting up a system for myself through that, rather than just being random. So that's what I was just taking a look at that. So that's the honest truth there. Hit the like button, by the way, if you haven't already. So yeah, is this year coming and making money on a quarterly, yearly basis, consistently, not blowing up. Preserve your capital. Um, I've had this. Who did I speak to? A student. This was a few weeks ago, and they've been in this rut. Yeah, I'm gonna talk you through it. They've been in this rut, like a really bad rut, where they're just breaking rules, doing everything, not everything wrong. They're just breaking one rule and it's fucking detrimental, and they can't stick to a day stop. A day stop. Okay, and this is hard in the beginning, I guess, if you're a potential gambling addict. Um, but if you have fucking a day stop of, let's just say, $1,000, why are you going over that value? I'm then asking them, like, they come into the call and be like, they really want this more than anything else, and I'm thinking to myself, like, they're just lying to me. Like, you're lying to me if you're saying you want this more than everything else, and then you're not able to stick to a fucking day stop. Like, how is that possible? Right? You have to be willing to do what it actually takes, not just say you want it more than anything, because perseverance isn't going to get you anywhere. You have to really put it in what you're going to be doing. Even if you dedicate your whole life to trading and you do a lot of different things, it doesn't guarantee you're going to make it. Unlike most other businesses, at least. Like, if I stay at a fucking accounting firm for 30 years, like, the likelihood is I'll make it, but it's not the same in trading. There is no guarantee at all I'll make it, regardless of how long I'm here for. The same way I said in the beginning, like, just because you have a level, there's no guarantee it's going to react the way you want it to. You know, so you have to really put in that work in, and you have to have a day stop. Like, in my opinion, like, know your per day limits and your per trade limits. How much are you going to be risking per day? If you don't know how much what your day stop is any given day, like, how are you trading without that? Honestly, you just. And I have this take which is a bit more different, I would say, to the most of people I see online, because I know a lot of people on at least X, in my opinion, they're more kind of free flowing, bet more when you have extreme high conviction, which is completely true, but that conviction should be based upon statistics and not just your gut hunch feel, right? That's the problem. Nobody talks about that. They just say bet more when you have conviction, and when someone fucking gets a boner, they start betting 5 times more than they should be, right? That's not what should be happening. There should actually be reasoning and sufficient reasoning behind it. Okay. So yeah, it's gone quiet in the chat. Where's everyone gone? That's the thing. Like, I mean, I personally would say if you're gonna have a day stop, like 3-4% is 4% maximum. I would say, you don't want to be losing that. I mean, I posted let me get it up quick. I posted this. I'm gonna get it if I can get the image. Yeah. Okay. I posted this on X. I should really be getting some just like diagrams ready for the stream and then running through thoughts on them even more. That'd be really powerful, I feel. But like I'm saying, having these 4% down day limits is really important, because you can see here how just exponential and detrimental drawdown can be if it gets beyond a recoverable rate. If someone just blows 20, 30, 40% of their account in a day, they are fucked. In a single day. That should never happen. That shouldn't happen. And I know a lot of people normalize that type of stuff in this industry, but it shouldn't happen. Professionals don't let that happen. They don't. And you can see here, there are multiple, but drawdown in particular here, like if you lose 50% of your account, you have to double it to get it back. And the only way you're going to do that is by fucking over trading and trying to make more back than you lost. And that's by over trading and trying to make the money back and greed. And that's putting yourself, this is how the trickle down effect works. I want to draw this out. I've kind of got it in my head here. So, no day stop means excessive day losses, right? So if you don't have a day stop, you're going to have potentially days where you have excessive losers, which isn't what you want. And then you're going to want to make that money back. And then that has put you in an emotionally compromised position. So you can just see here how one thing of just not having a day stop means you have an excessive day loss, means you want to make that money back, puts you in an emotionally compromised position. It's a trickle down effect. Okay, and that's why it's like, and this isn't the only thing that happens that too. It could be happening from so much. So how could you fix this? Let's say you want to have a day stop, but you can't stick to it. Well, how can you stop yourself from trading? You have to ask yourself that and work through the cycle in that sense as well. So that's one of the things there. That's really important to understand. Sorry for rambling on about that. Is every key level important? Like monthly, weekly, Monday opens, etc. Or some? No. And I think a lot of people prioritize all this shit without any sort of data behind it again. This is the thing. I think if I say, I always go on. I don't want to go on about it because I'm probably annoying some people about the amount of times I say statistics and data, etc. But if you say you have if you knew what percentage chance these levels were going to perform a reaction at, right? You wouldn't be asking me which level is the most important. I'm not saying you're saying anything wrong. I'm just putting this out there, right? So it's just like kind of, you have to work around what is best for you and go from there. No one told me to look at volume-based MPOCs and figure out what the reaction is there, right? And categorize it into which one has the highest volume POC there, etc. You have to be kind of really diligently going through each one of your levels and figuring out, okay, is this a powerful level to be trading from? Why is it? How can I categorize that? Okay, and going through that in that process. Okay, because that's the only way you're going to succeed personally. I really do believe that there's so much generic information out there that you can just get sucked into this hole of following what the majority are doing. And you can find profitability with what the majority are doing, but edges drop and fall off, and I just don't feel like you're going to be picking up the right habits or learning tools or whatever by just following the majorities in reference to their setup strategies, fucking, I don't know, terminologies, etc. The best way to do it is screen time and excessive journaling and risk management. That's really it. Any further questions? I always go over. I'll go over like my plans and everything, but it's not really the most important thing for you. It is to me to go over like what I think can happen, for today or tomorrow. That's not. I don't want to do that because I don't think that's going to be beneficial to you, really. NPOC, naked point of control, the highest point of volume with any sort of period or candle, can depend on what you're looking at. Generally, I look at 30-minute and 15-minute NPOCs. Start on 0. So recommended volatility start on 0.15%. There you go. Yeah. But thank you to everyone for watching. I appreciate you all. Again, 50 minutes, but I've kind of rambled on a lot. I'm next week. Just let me know what you want me to cover next week, because there's tons of different things I can really be going over. And you should really be thinking about fixing the root cause to any of your issues through your journal and actual actionable steps to do so. Do you have a daily report card you fill in every day? I don't show it because it's fucking boring to show you lot probably, but I have a daily report card that I go through every day, that I literally fill out every single process of it every day, and it keeps me on track of everything. If you want to start gathering statistics but have trouble because I get in my head making it more, literally just gather the most basic things that you think of. It's you don't have to be complicated at all. The most basic thing is people don't track the most basic thing even. People are very fucking lazy. They want to know where's the high and low of the last previous fucking. Think about. No one does that. Nobody does that. Just think about high, low, open, close. What can you track from those? Track those, export that, and think about how you can manipulate that type of data. In the beginning, Tony, it was a lot of screen time. Like I was trading, I was losing a lot of fucking money. Well, at the time, to me, that was a lot of fucking money, but it's not significant at all. Um, yeah, I mean, at least Tony, at least you get bored and go away. People get bored and start fucking clicking and doing something random. Um, I mean, if something happens, that means you need to set your alerts. Like, why don't you have alerts set as to where you want to see stuff happen, like a few $100s before, so you can have time to sit down and prepare for it. And if you're not ready to trade that, then you shouldn't be looking to trade at all that day. So it's like, yeah, there's tons of different ways to look at that. Yeah, but hopefully that makes sense. Anyway, everyone, yes, I will. I'll make a video going over daily bias. Um, and I've got some really exciting stuff for you that I know categorically you will find very interesting, and it's very different to this space. I haven't seen anyone really go that in depth on their own stuff. And I really want to cover that with you all. So yes, thank you everyone for watching, and I'll catch you next week, same time. Be back here, same time.